that's it.
Markets on sale, baby. Markets on sale.
Crazy sale.
I already got I had some options that on some fully undersold stuff that looking at the charts is guaranteed to pop. But I just averaged down on them joints, man. And then I had a green day because I had some undersold Zillow from like 2 days ago. Yeah. And they just started popping when everything else was going down. My Zillow was busting.
Zillow popped 9%, whilst everything else is down, which is crazy.
Right? It was like that was my only one. Everything else I was averaging down, but that Zillow bust.
Yeah, so, exactly, man. I mean, here's the thing.
Going crazy though, man. I've been checking, and I'm starting to see now more like I knew it, but I'm like, all right, I'm going to start. I've always been doing like a little bit with my crypto, but like now I'm going to start going here more and more and more as I'm seeing what's happening, because a lot of this shit ain't going to pull back that low no more.
Exactly, man. I think like the big thing with crypto is this, right? Like people always ask me like, where should I put my money and stuff like that. And it's a really complex question to answer. But here's the thing: it's meaning money has already been made there,
right?
The risk and reward is already set, and it has a high risk. Generally speaking, there's going to be a high reward there. Most of the time. Now, if you want to take low risk, you have to then accept you're going to have low reward, right? Same thing with options. Now, with real estate, it's the same thing. You can find a triple net lease on like a Starbucks or a Home Depot or Lowe's, and that's going to be like, so the tenant has to pay for like property tax, maintenance, and also the insurance. Now, 10% a year. That's for buying like, a Tesla garage or like, any kind of big retail. Now, that's real estate and stock market. Check this out. Crypto is an inefficient market. This means that you're going to find gains in that market with relatively low risk. Like right now, I'm staking stable coins, meaning I convert some of my crypto.
Not to cut you off, but that was my next question, because a couple months ago when I first started hearing about staking, I didn't look into it and start learning yet. But you really should explain to people about staking where it's at now, because it's it's like an automatic like 15% as opposed to.
Let me tell you. Here's the thing. Some people have been telling me this. So let me finish what I was saying before, then I'll go on to staking. So here's the thing. Inefficient markets versus efficient markets. Because crypto is so inefficient right now, I'm staking US dollars and getting 40%.
That's what I was seeing.
Now here's the thing. If you do this on your own, you can get 40%, right? You go stake through Coinbase or Crypto.com or whoever, they're going to give you, like you said, 15% or something like that. And it looks so attractive. But they're taking advantage of you. They are getting 40, they're minusing the 15, and that's what, and exactly. So they're keeping the spread. Same way, right, that the bank takes your money. Like you go put your tattoo shop money, or like, someone else might put their like, normal 9-to-5 job money in the bank. The bank takes that money, loans that money out, makes a return on it, then pays you 0.05% per year.
Right.
But here's the thing. Coinbase and all these other sites are becoming the new banks, where they're taking that return by using your crypto that's being held on the exchange. So you're getting the short end of the stick. So why not learn how to do it yourself? Why people don't want to do it? Because it takes extra time, takes extra knowledge, right? But if you learn how to do those things, I'm getting 40% on US dollars. Like, when I start looking at real estate right now, I don't want to go buy a property, because right now I can get 40%. 40%, like you're not getting that anywhere without risk. Now, how are we doing this, right? Through staking. So we're buying things like US dollar stable coins. So these are cryptocurrencies which track the price of $1 US. They will always be worth $1 US. So what I did recently was, a couple months ago, I took my entire emergency fund out, right? So I had like, a little bit of money, on the side, in the savings account, just in case anything ever happened. But I never needed it. I took that money straight into stable coins. $1 US worth $1 US, so the stable coin is safe. I stake that and receive 40% in return. Now, yes, there are steps that you have to do to, go through that, like, lending the money and then borrowing against it, all that kind of stuff. But once you learn how to do those basic steps, there's so much money to be made, man. So much money.
Did you throw a DeFi course on that in the cash flow college?
Here's the thing. I don't want to do a course on it. Instead, I'm just giving free info. Just literally, just all in the Discord, free info on DeFi. Yeah. And also AVAX, bro. AVAX, I called it at $50. It's over 100 right now. It's doing pretty good.
I use it. I traded it for profit just when I needed it. But I'm gonna jump back in because it's still, like you said, shit's untouched yet.
A nice price right now. Let me show you a couple stocks. Let me show you some long term. Have you checked the long term in my channel?
I saw you put in for the long term because I'm definitely like long term shopping right now. Like I'm swinging on other stuff, so I ain't doing no short trading. Just because shit's coming up, everything's selling off this, that, and the other. It ain't even end of the year. They sold off $69 billion worth of shit. You know what I mean? So I'm buying all this long term shit. You know what I mean? It'll be 6 months of next year in no time. So.
Are you heavy into dividend stocks right now, or just growth?
Well, that was my because when I sold I sold a lot of that portfolio when it was lower, and then I'm about to jump back into. I always got to think for dividend stocks, and I had learned that from Chris Johnson early on, and then he was just saying now he like, yo, really? He looking at dividend paying stocks sideways, and for what he making on his crypto and what he's gonna make on his crypto more, that he's gonna start liquidating a lot more of his shit, his dividend paying stocks into some of his crypto and the staking.
Makes sense to keep both, to be honest, because of course diversification is number one. I never want to keep all my kind of eggs in one basket. Of course, I think dividend stocks, you don't want to be in a dividend stock just to chase yield, right? You don't want to be in one that's just paying and it's not appreciating value. So if I buy one share of AT&T for $30 and that's not going up in value, but I'm just receiving a dividend yield every 3 months, I don't give a shit about that. Yes, it's income, but it's not increasing in value. Because once you factor in inflation, if I'm getting 7%, someone's printing loads of money, I'm only making 1%. So, what the hell's going on there, right? Really, I'm only making 1%. So when I work it out and I look at some stocks, the reason I like this stock here, ABR, right? Arbor Realty. The reason I like this one, because it's beat the S&P 500, and I get right now, 7.9% dividend yield. So 8% yield, and in the past 10 years, it's beat the S&P 500 in terms of growth. So I've got growth and dividends, both. So the best of both worlds. Now deals like this are really hard to come by, extremely hard. And to tick all these boxes, so fundamentally sound in terms of their great businesses, increasing sales year on year. They also pay a great dividend yield, and they also appreciate in value. If you combine those three, it's a gold mine. Absolute gold mine.
Well, if it's in cash flow college, man, y'all gotta check it out. Y'all definitely gotta check it out. And he ain't charging extra for it outside of the college, man. So many people I still hear people talking about they don't want to put the money in and then become parts of the groups or learn more. It's like, man, you in a community of people who know shit and they answering questions that you just don't have on your own.
Yeah, exactly. Yeah, that's what it's about, man. And I think
that stock was was it ABR?
ABR, yeah, Arbor Realty, ABR. I'll give you another one as well for you guys to check out. So that's one dividend stock. What should I give you? I'll give you this one. I mean, that one's a slow growth. I mean,
ABR.
It's a REIT. Yeah, real estate investment trust. So here's another thing: if they pay out 90% of their profits, to the shareholders, they don't pay corporation tax. So they can, exactly. So, I mean, there's a game there in of itself, right? It's crazy.
Yeah, let's make it buy more. So you good on that other 10% anyway.
100%, man. I mean, another one for you guys to check out as well. Great company, CrowdStrike, right? CRWD. Now, CrowdStrike's crazy because number one, it's low as hell right now. RSI at 26, right? So we look at the RSI here. It's low as hell. Why am I not going to buy into this company? Because here's the thing, look, low RSI here, low stock price, right? Low RSI here, low stock price. High RSI, high stock price. Like using the RSI.
Like 7 months ago, that support all the way down there is about to hit.
What, this here?
Yeah.
This was May.
May?
Yeah.
Yeah.
So a couple months back. So yeah, I mean, that's exactly where it's going to hit. Now, I've got the support set up here. It says 189.59. So I'm waiting, until it hits around there to load up heavy. But CrowdStrike is crazy because if you look at the fundamentals as well, that's what's key. I feel like, a lot of Instagram, a lot of people sharing stocks, but they don't look at the fundamentals. And that's where they get caught out because, yes, technically it could look good on the chart, but the fundamentals may not be good, right? The actual underlying company. Like if I pull up CrowdStrike, I'll show you guys a little bit of game real quick on fundamentals because a lot of people don't know this stuff and it's important, really important. So if you go over to a website called MarketWatch, so it's at the top right, MarketWatch, and you go over to financials, it's really easy to understand this stuff as well. Now, if you think of a company in terms of money in, money out, right? Really simple. So if we're looking at increasing revenue year on year, so we look at 2017, 2018, 2019, 2020, and then that's this year right now, 2021. Look at their growth, right? CrowdStrike, 52 mil, 120 mil, $250 million, $500 million, $750 million, right?
Double.
Crazy increases. Now, if you go down and we look at a couple of other numbers that are key, net income, right? Yes, the company is not profitable yet because it's a brand new company. You know, it's relatively new. But they are increasing their net income. Well, they have been recently, right? They've had some nice growth. Now, if you go up and you look at the balance sheet, this is what's key for me as well. If you start looking at the balance sheet, there's a couple of different numbers that I like to, you know, take into consideration. This is like if you want to do it real basic, you don't want to, you know, go into depth. A couple of things I'll look at. I'll look at total assets, right? So you can see this is increasing year on year. 91 million, 217, $500 million, 1.4 billion, 2.7. Now, here's what you want to do. You take that number, 2.7 billion, and you want to work out how much liabilities they have. So this is what they owe in terms of debts, etc. So 2.7 minus 1.86 will give you the total equity, which is 871 million. So this is how much money they have in the business. If you think of it as you personally might have, you know, $1 million in investments, but if you have $2 million in debt, you are actually in debt $1 million. So it doesn't matter how much assets you have, you're still in debt. So companies work in the same way, where you'll find a lot of companies, they will have a lot of assets, but people are not taking a closer look and looking at how much they actually have in debt. Because why are you buying a company with no equity inside of it? It doesn't make sense. You know, It's like, you know, would you go and buy a laundromat that, you know, costs $1 million, but they have $3 million, you know, like $3 million in debt? No, because it doesn't matter how much money they're making, they're still in debt. And that's the way that I like viewing investing. The charts only tell you when to buy. Fundamentals like that tell you what to buy.
You know what slowed me down this week was when I seen you say it, and then a lot of people don't know that, like, it ain't just going and charting. For one, it's going looking at balance sheets. It's looking at the financials, checking the market cap, checking the float, seeing what their debt is, seeing what their assets are. And he was like, yo, I just went in stocks and I ain't
trash.
like nothing right there.
200 trash options. Literally, like I went through so many charts, there was nothing to buy. No options. And I feel like a lot of people right now are, you know, kind of gambling in a way. Because they're buying these, you know, out of the money options, just hoping. And yes, some people are hitting hard. But a lot of it right now is luck, if I'm honest with you. It's the same as March 2020. You know, last year was very easy to trade options because of the volatility. Like right now, you're pretty much either going to make money or you're not. It's like 50-50 right now. So I just stay away. I'll watch. And then like today, I just went crazy, right? Just utilize all that money and just went crazy, just buying.
Don't got to trade every day. No position is a good position. And
exactly. Cash is a position.
Building your cash holdings is a great position because the shit's good. Like today, you know what I'm saying? I had shit that I profit and I sat and I chilled. And then, you know, I got shit to be able to buy, you know, when it's time. So,
exactly.
But I think a lot of people that even just getting in the charting, you know, they're not getting the information of knowing that you have to go like, you know, doing your research is not just learning the charts. That's a big fucking step, but it don't stop there. Now, you know, I look at so many people, you know, including yourself, that I follow that now they're starting to put in their, they're starting to put in some of their like reels and things like that, like how much they're going to go check all these financials because it's a whole nother part to it. It'll allow you to know your shit on your own as opposed to you can be in a group and follow people all day